Hey everybody, it's Mr. Mortgage, October 31st, 2008. And what a spooky October it was. We went from financial Armageddon, where everyone's going to Costco, buying canned foods, dry goods, guns, gold, and fear that their ATM machines wouldn't work any longer. Guilty. To one of the largest stock market rallies in history last week, where the market gained more than any time since 1974. Pom-poms are waving, it's blue skies ahead. Well, you and I, Joe Sixpack to Joe Sixpack, we know there's serious trouble out here on the consumer side. Our debt levels are here and our asset levels are down here. We're going through a major asset revaluation on the residential real estate side and everything else we own. And there's no assistance coming our way, right? There's assistance to the big banks, the insurance companies, everybody who needs help is getting help. We're not getting the help we need. Well, until recently. That's what I want to talk about during this video, is all of a sudden, everybody has a plan to save you through mortgage modifications. I've been talking about that for a long time. At Green Credit and at Mr. Mortgage, at Mortgage Lender and Plotometer, and at Mr. Mortgage, we endorse Green Credit Solutions, getgreencredit.com. We have been for a long time. I know that the only way out of this is for a large-scale loan-by-loan mortgage modification for every loan done from 2003 to 2007. That's $7 trillion worth of loans that need to get modified. Probably going to cost $2.5, maybe $3 trillion. But it will save the problem. I'm going to talk about that in a minute. But before I do, my blog, just go to Google, type in Mr. Mortgage. I pop up first with all sorts of cool links. You can also go to the Mortgage Lender and Plotometer and find me. I also want to talk about TARP real quickly. Also some existing home sales numbers that came out about a week and a half ago that were bogus. Then I'll get into mortgage modifications. First, TARP, $700 billion bailout. The Troubled Asset Relief Program, aptly named so because it doesn't do any of all that. Actually, unless the troubled assets are the banks themselves. This began as a blank check to Paulson. Now it's a blank check to Paulson and the banks, right? There's a lot of blowback in Washington right now over this program after Joe Nocera's story in the New York Times caught Chase red-handed, saying they're not going to be lending any extra money to commercially or to consumers. Remember what they told us when the financial markets were melting down. If you just give us $700 billion, we're going to go out and buy all these nasty, bad mortgage assets. We can hold them longer than anyone else can. When they increase in value, we're going to sell them, we're going to make you guys a profit, and some sucker's going to buy them from us. That's great. Luckily, they didn't do that because it would have been a total failure, right? But the fact of the matter is that's what was sold to us to avoid a depression, to get banks to start lending again, and to save the markets. Well, subsequently, the stock markets have crashed, banks aren't lending, and they're not doing what they promised. Their credibility shot, and there's significant blowback. I think the TARP program will change fundamentally with much more oversight in the next couple of weeks. Could be a wild card coming. Home sales were reported in the state of California surging through the roof. As a matter of fact, I'm sitting there eating popcorn, and some 22-year-old newscaster's telling me that if I don't go buy a house, I'm missing the biggest opportunity of a lifetime. It ain't happening, guys. It's not the truth. They used bad data points. I have 2 stories on my blog. You got to go back about a week and a half. It's just not the case. As a matter of fact, organic sales, me selling a home to you, the true health of the housing market, that's where the strong part is in the housing market, not first-time home buyers or investors buying foreclosures, is at an all-time low. Values continue to drop. Mortgage loan defaults and foreclosures continue to stay elevated near all-time highs. The housing market is getting worse. We're not going through a correction. We're valuing real estate assets where they should be valued without all the leverage in the system through exotic loan programs that's been there for the last 5 and 6 years. Guys, we're going back to a time like we've seen over the past 10 decades where you value homes based upon the interest rate environment, location of where the property is, the overall economy, incomes, right, and rents, cap rates, real simple stuff, how to value properties. And with all the exotic loan programs over the past 5 and 6 years, it led to the largest residential real estate bubble in history. Now all those loan programs are gone, so we can't go back to a time when those programs existed because the leverage doesn't exist anymore. So what's going on is, of course, the higher paper rates are falling now. All these loans that are considered prime, they're buckling, people are walking away, no one can figure out why. And what that does is that opens up about $7 trillion in mortgage loans that were originated between 02, 03, and 07 that's stuck on the books that are still there to be suspect. Those are all now suspect mortgage loans. So now all of a sudden, the FDIC, Chase, Bank of America, they all have their mortgage modification plans out, and they're all endorsing mortgage mods, right? Again, we endorse Green Credit Solutions. GetGreenCredit.com. There's a link on my site. You can go check them out. They're one of the very credible companies out there. There are other ones out there, but there's also some very incredulous people out there who will take your money. So Sheila Bair comes out last week saying she has a plan to modify 3 million mortgage loans, heralded by the market. Chase comes out Friday saying they plan to modify 400,000 loans, likely what they got when they inherited WAMU, the pay option arms and subprime. Luckily, they got to take a serious write-down on those portfolios, so they can give principal balance reductions along with those mortgage mods. Hopefully they do the right thing and do that, because anything short of that is simply kicking the can down the road. But we don't know what Sheila Bair has in mind or what Chase has in mind right now. We've seen Wachovia's and Bank of America's. Bank of America will give you a 2% interest only all day long for 5 years, right? It kicks the can down the road 5 years. Your home value is not going to go back up to the level of your mortgage loan. In 5 years, you will default, you will lose your home, you will go bankrupt. It's that simple. It's a horrible program. Wachovia has a program to get you off of their books and refinance you with FHA or with Fannie and Freddie. They'll chip in amount of money called a spend to your mortgage loan, where they'll buy down the principal balance and the interest rate until you qualify. That's how it really should be done. But the fact is, they make you sign a silent second mortgage. So your debt level still stays up here and your asset values are down here, and you're still over leveraged to debt. And that's why that program, I believe, will ultimately fail. The only way we're going to get out of this problem and get ahead of the future implosions, right? Remember, nothing is as it seemed. No loans originated from 2003 to 2007. Those original buckets of subprime, alt-A, jumbo prime, and prime really exist any longer because they were done under false pretenses. It was all fake. Remember, prime borrowers in history had to put 10 or 20% down. They had to have 28-36 debt-to-income ratios, right? They had to be good credit borrowers. With 28-36 debt ratios, even if your home value dropped, you could still save money, do the things you wanted to do in life. So it really was a non-starter. Hey, we're down a little bit in value. Who cares? In the past 5-6 years, they allowed prime borrowers to do zero down, to do interest-only loans, qualified interest-only payments, and even worse, to have 50% debt-to-income ratios, meaning half of your gross income goes out in debt every month. You go stick a second mortgage on top of that, you buy a ski boat, you buy a Cadillac Escalade with 24-inch spinners, you're paying 70 or 80% of your gross income out in debt, meaning you're dipping into savings. That's really great when values are going up $100,000 a year, but when they start going down, you sit around the table to your wife and you say, hey, how are we going to get out of this problem? How are we going to save money and get our balance sheet right again? You lose the biggest nut you have. That immediately deleverages you overnight, and that's your mortgage. And that's why the higher paper grades, we're seeing default in droves right now. Remember, 9% of all mortgage loans in America, 5 million mortgages, are now delinquent. That goes way above subprime, guys. That's into your prime paper grades that are sitting on banks' balance sheets that they're still considering prime, that were originated during the bubble years. All those loans are suspect. $7 trillion in loans are suspect. You likely have one of those. That's why the FDIC and all these banks are coming after you. A mortgage modification can help you undo everything you did in the past, right? All the bad mistakes you made, the bad refinance, the bad purchase decision you made, right? But it has to be done right. You have to take your real income, what you really earn today. You have to be requalified at 28-36 debt ratios, put into a 30-year fix, so you ultimately own your house one day. Perhaps the government is going to mandate a mortgage modification program at some time in the future. But you know what? That'll likely come with giving up equity in your property, giving up future equity. Right now, you don't have to do any of that. If you get a letter in the mail from one of these banks wanting a mortgage modification, this is an opportunity for you to use that letter as leverage to get something that really suits you and really suits your family. Don't blow it. Seek professional help if you can't handle it. There's a lot of companies out there doing mortgage modifications. Again, Green Credit Solutions. GetGreenCredit.com is who we endorse at ML Imploded and at Mr. Mortgage. They'll do a great job for you. They know all the banks. They know their thresholds. They'll re-underwrite your loan. It's time to do it. Even if you don't get a letter in, you're underwater in your property, you have an exotic mortgage, you should explore getting a mortgage modification, get a loan, getting a new mortgage loan, 30-year fixed according to what you really earn at 28-36 debt ratio. So ultimately, you own your house one day. Mortgage modifications are becoming mainstream. It's coming to a mailbox near you, and you have to know how to act when you get that opportunity, because you only might get one shot at it. Anyway, go onto the blog. I have a big story I just put up on mortgage modifications for you to see. Anyway, I hope I helped you out here, guys. When you go onto the blog, make sure you put your email address in and subscribe to it, okay? Then you get everything emailed to you at the end of the day that I put up there. Also, subscribe to this YouTube channel by hitting subscribe down there. When you're down there, give me 5 stars, guys. I still work for stars, and by all means, don't believe the hype.